Good morning, everyone. Once again, this is Black Forex. Today, we're going to be coming at you with an oil breakdown video. We're going to be discussing the recent events that's been happening with oil and how it can affect the prices of oil going into this trading week and future trading weeks to come. But before we go ahead and dive into that, we have to state that this video is for educational purposes only. This is not financial advice. Okay, so now that we got that out the way, let's go ahead and break down what's happening with oil. Okay, so what's happening with oil is very unique in itself. Okay, because as the article states, okay, let's go just get into it. Oil longs we're starting at their worst week in 2 years on Friday as trading for April begins with the crude selling below $100 per barrel support, and big gains for the first quarterly already are in the rear view. London trade Brent, the oil global benchmark, settled down 32% or 3% at $104.39 per barrel after a session low at 102 dollars and 30 cents. Week to date, Brent was down 13%, its biggest weekly decline since April 2020. On Thursday, it finished up the quarter up 39%. So this is what basically happened with oil. The Biden administration went into the American oil reserves to release more oil into circulation into America to bring down these increasing gas prices that you're seeing at the pump. So if you drive a car, or if you do any type of car services like Uber, Lyft, DoorDash, K Cart, and all that good stuff, and gas is very important to your businesses, right? What you started to see was a decrease at the pump for gas prices, at least around between, looks like it was on average about 30 to 40 cent. And you may continue to see a drop in the gas prices, but do not take that drop as hopes for things are going to get better, because we released more oil into circulation from our reserves than we ever did in American history. That's not a good sign. Okay, because the only thing that is that we're putting a band-aid on something that needs economic surgery. Okay, we're putting an economic band-aid and we need economic surgery. And this article touches on what exactly going to happen very, very beautifully. Okay, and we're going to get into it. Okay. Analysts across the energy sector warn of a worsening supply crunch in the coming months as United States upholds its ban of Russian oil. Now, what caused this entire increase in the gas was due to America banning Russian oil. Now, you have to understand the way oil was weighed and judged around the world. There's not Canadian oil, there's not Russian oil, there's not Middle Eastern oil. All the oil supply is judged as a whole. So, with America banning Russian oil, right, that made an artificial decline in the oil, in the circulating oil. Okay, so we artificially caused the numbers of available barrels of oil to decline. Okay, and that artificial decline is what caused the increase in the gas prices for our countries and basically all the countries around the world. Okay, while many nations avoid business with Russia as well due to sanctions imposed against Moscow over its war on Ukraine, despite much warning, the world's biggest oil export, OPEC, along with its allies, which included Russia, decided Thursday to do just a modest production increase for the next month. Okay, so not only did we release our available gas oil reserves in America, right? OPEC, which basically is like the regulator of oil, right? It released also some of its reserves just for a month, just to bring down the gas prices. Because the thing about it is that these gas companies can make record profits off of this. But the thing about it is that these high gas prices are literally crippling economies. Okay, because you have more people spending money at the pump, less people spending money at the stores, and on consumer goods, which is causing countries' economies to stagnate and to even shrink. Okay, and this also furthers inflation. Okay, so the wider oil production alliance, known as OPEC, said that it would increase output in May by 432,000 barrels a day. So this means that for us, a short-term temporary time, at least looking for the next about 1 to 3 trading weeks, we're going to see a continuation in the drop in oil prices on the charts, which means it's going to be going towards the short side. Okay. That's a slight uptake in its typical monthly increment of 400,000 barrels per day, on market analysts said, was in need of around 5 million barrels more. OPEC also said Thursday that the recent volatility in oil prices was not caused by fundamentals, but by ongoing geopolitical developments. Okay. So even OPEC is saying, like, look, there is no economic indicators that is causing these gas prices to go up. Only just basically governments are banning Russian oil, which is causing gas to go up for everyone. So America is banning Russian oil, which is causing gas prices within our nation to go up. And it's also causing gas prices to go up all around the world. If you've seen our previous video on the Japanese yen, as you can see, the Japanese are having to take an active role in combating high gas prices due to the oil Russian sanctions. Okay? In an apparent reference to the war in Ukraine, Brent hit 14 years highs, almost 140 dollars per barrel in the aftermath of the sanctions imposed on Russia, and have held largely at above $100. Okay? So basically, we're in this situation where, to sum it all up, so you don't have to get into all this, this is the basic situation. If there is a continuation on Russian oil being banned, we will see increased gas prices at the pumps. Increased gas prices at the pumps does not matter what country that you're in. Okay, increased gas prices at the pumps going to means that less money is going to be getting spent on consumer goods, because all the money has to get spent on gas. Okay, with you having less money getting spent on consumer goods, that means that the economy, right, is going to start to stagnate and shrink because there's no money coming into it. Now, that's on the consumer side. On business side, right, if you have a business, run a business, own a business, right, you have to, if you ship the stuff yourself, you have to pay for increasing fuel cost. Okay. If you use a shipping service or a trucking service, you have to pay for increasing fuel costs. These increase in fuel costs are now offset by you increasing the prices on your goods, so your company can at least break even or stay profitable. Because if you keep your prices the same, with your increase in oil or your increase in shipping goes up, right? That means that you're going to be operating at a loss from a business standpoint. Okay. So if we continue to see this, this is going to lead to inflation for all the major world G8 nations, and we're going to see global inflation, global recession. Well, we're already in global inflation. We're going to see global recession and happening very soon, sometime really officially hitting off by probably July for the entire world, or at least for America itself. Okay, so in order to fix this, the governments of the world, they're going to have to get these geopolitical stuff together so it's not affecting everyday people. Okay, so how this what you're going to see on a chart for the next 2 to 3 weeks, as oil, as countries start taking a more tougher stand on getting prices down, as you start to see countries release their own oil reserves, as you start to see OPEC release more oil into circulation, that is going to be more and more and more oil going into circulation, right? Which means that prices are going to come down. But please, you have to understand that these prices coming down is only going to be temporary. Eventually, as long as the geopolitical climate does not change and this Russian ban on oil stays as it is now, we're going to see a resurgence in oil prices, right? And that's going to lead to even higher gas prices than what you ever seen before. Okay, we're talking about if you're on the East Coast of America, gas pretty soon, especially going into the summertime, is going to be $5 or north of $5 very soon. On the West Coast, you could be looking at gas going north of $7 to $8 very, very soon as the summer months come. Okay, but how to trade this is basically as you start to see the governments are taking tougher stands on oil, as governments are starting to release its oil reserves. That means that the prices are going to be going down on oil. So you'll be looking for shorts or sales on the charts. Okay, as you start to see uptake in gas prices. Okay, that means that that's because that the oil reserves of all basically ran its course, and once you see to start to see the uptake in gas prices, right? That means that oil is going to be going for the long position, and we can actually get higher than $140 per barrel, which is an all-time high, probably sometime by the summertime. Okay, so I hope this information was helpful for you guys. Happy trading.